Hello again, welcome to the Alpha Wave Trader market update on a Monday. Happy New Year to you. Hope you had a good Christmas break. Today I just wanted to recap on what I went through in my last update. If you didn't watch it, go and look it up on the website. I'm sure under my name you can find my previous videos, and it's just a good exercise to follow up on what has been said. So you can understand the process and what I'm saying to you. And really, there's a couple of key concepts that I keep focusing on, and that is the buy and sell pivots to give you a sense of direction across different time frames, and also the buy and sell zones of waves. And you can look at my past articles to understand that a bit better. And I just wanted to follow up here on my previous update and also show you where we are now that the year has ended and we have the quarterly candles have been completed for the last quarter. I can show you the big picture and give you a sense of why I now think any rally is a bear market rally, and by using those pivots to understand direction. So we'll get stuck into it very quickly. In the last update, prices were trading up around this area, and the way I look at price action is to analyze these large pullbacks in price after a huge wave up like this, and I make calculations off that large pullback. And basically what I'm saying is that the price action that develops after that pullback is related to that range. So you can actually make calculations from that, and then I look at the midpoint of that range, which is the point of control, the POC, and it's not going to be written beautifully because I'm writing this straight with my mouse. So that's the point of control. I also look at the buy and sell zones within that area. So we have the, well, I'd call that 75 to 87.5%, and the 12.5 to 25%. So that is that area, and I call that the buy zone, and that's the sell zone within that range. And you can see that prices met resistance there, found support there, again found resistance there, also bouncing off that point of control over and over again, and even recently. And this is a weekly chart of the E-mini S&P 500, just in case you hadn't read that up there. And you can see prices bouncing off that buy zone, getting rejected from that sell zone. So those are the key levels for me within those ranges where you can find opportunity. And when I spoke to you last, it was down just in that buy zone of the range, so it was very sort of unknown what would happen at that point. And I did say if it broke below January's low, watch out. And the reason for that is because people are building up positions in this area over the past year, and a lot of them have their stop loss arranged below a major low. So I was pretty confident that there would be a lot of stop losses in this area, and I said if it broke below the January low, we could see a sharp move down into this zone. And I gave you an area, and that zone was based on it being 25% outside this range, and also 618, which is a very key level, the Fibonacci level outside the range. And if we look at what happened, you can see that huge sharp sell-off, and I want you to make a very special note of this. The low created was within 5 points of the low that I gave you here, and that was when prices were all the way up here. So you can ask yourself whether you think that is just a fluke or whether there's something to what I'm saying here about the relationships between the size of these pullbacks, major pullbacks especially, and what happens afterwards, and the fact that you can start setting your strategy off these prices. Now, I also looked at the whole wave higher, and so that is the rally from 2016 to 2018 in the S&P, and we had the midpoint of that here. So that's also a very important point, and so that was 2375 was that area. So that's why I said, you know, when prices were here, that if we do bust that January low, watch out for a huge move. And I'd say that my area that I gave you was pretty much spot on as far as where you would find support once all of these stop losses that were in this zone went off. And so now that we've had that confirmation, it's like, well, where to from here? And the way I can analyze it for you is that prices on Friday actually closed above the previous week's high. So we now have a weekly buy pivot. So we've actually had a close above the high of that previous week. So that weekly buy pivot says, you know, there could be higher prices on offer in this next period, but that doesn't mean it won't sell off initially before rallying higher, and I wouldn't be surprised to see that at all. Basically, I'd need to see it closing back below that low to be saying watch out. And tell you what, from here, if we do head back below that 2300 area in the short term, you're going to see another sharp fall towards this buy zone of this entire wave up. So there are some pretty strong lines in the sand now, and you know, this rally could take months, could take a few months, getting all the way up into this area. And you can see I've got the sell zone also of the wave, and that's a very important thing to keep an eye on. So watching this price action could end up looking really good, getting back up towards the all-time highs and getting everyone bullish before rolling over again to the downside. So that's sort of how the market moves, is that it gets people, you know, bearish, very bearish, and there'll be lots of people who have put lots of positions on the way down, feeling pretty comfortable and in a short position, and all of a sudden the market goes and takes them all out of their position, but doesn't take out the high, and then continues to the downside. So everyone's getting shaken out of their positions. That's just how the market moves. So if I just show you quickly the very long-term chart. So this is the quarterly chart of the E-mini S&P 500, and this goes back to 1997. You can see there, so we've got 20 years of data, and here I've programmed in, you know, when we get the buy and sell pivots. And just as a recap, you know, the sell pivot is you're looking at that highest price, you're following the highest candle, and you need to see a close below the low of that candle. So as you get to a new high, you're constantly looking at the lows, saying I need to see a close below that low. So there's the highest candle, and when you get the close below the low of that, that's when that black diamond comes in. And you can see that was in 2000 before the 3-year sell-off. Then we have a buy pivot the other way, and we get a rally for 4 years. Then we have the quarterly sell pivot, and we get the crash. And then we have a quarterly buy pivot, and we get the big rally. And this is a dummy thrown in that European sort of debt crisis time, and then Mario Draghi saying he'll do whatever it takes, and we get the buy pivot. So that's actually a buy pivot there, and we get a rally. Then big sell pivot there in the 2015 16 sort of taper tantrum times, and you still did get weakness from there, but then we got the buy pivot there. That's actually a buy pivot, and we've got a big rally, and now we've got the quarterly sell pivot. A big one has been confirmed. So looking at 20 years of data, where you look at the times we've had a quarterly sell pivot, it's picked out 2 crashes in that time, and then we've had a couple of false signals along the way, but we have had 2 quarters of selling after that sell pivot occurred, so you had plenty of time to be taking profit, and really only one where prices just reversed dramatically, but then you got a chance on the buy pivot to capture huge moves to the upside. When you look at it from that point of view, is it worth being very aware of the fact that we have this quarterly sell pivot in place? I think yes is the answer to that. And the way I look at it is that the opportunity, once that sell pivot is in place, is on the rally that we get back into the guts of that candle before things can finally turn over. And that is what I'll be analysing for you in the future, is looking for where those opportunities lie now that we have that sell pivot in place. But this was just to give you that sense of looking at these buy and sell pivots across time frames to just define very quickly the direction of markets, and to help you with your direction of your trading. Just can be a very useful thing, and the quarterly charts especially are just so important in this regard. Not many people are looking at them apart from the really big players. Often they can only change their positioning once every quarter, and these are the charts that really count. And so now that we have this quarterly sell pivot in place, you're looking at any rally as a sort of bear market rally as far as I'm concerned, until you get a close back above the high of that quarterly sell pivot. If we do get a quarterly buy pivot, then you switch, and then all of a sudden you're bullish. So that just helps you to remain objective and to know exactly where you are within the price action. So hopefully you can get a bit of a sense from that, from looking at my past update and the levels I gave you. So just to finish up, we've had a look at the quarterly charts, and we now know that we are looking at the market as big picture bearish. Therefore, any rally that we're going to see here after the US Fed has come out to try to rescue the market, I am seeing as a bear market rally. So even though I would expect to see higher prices over the next possibly even the next month or two, I'm looking actively for where the resistance will be, and there's many ways I can find those levels. One instance, just to finish up, we'll be looking at the current down waves, and you'll see that so often prices go into the sell zone or buy zone of a wave and will reverse. So if we look at the current moves down, this next wave here, prices found resistance in that sell zone, you'll see here, then found support in the buy zone there, and then found resistance again in the sell zone there. So just following that along, we then have this next wave down, major wave down. If we do see a rally in the short term, I'm looking at this sell zone of that wave as an area that should find pretty stiff resistance, and also we've got the 200-day moving average coming in around here, which is starting to actually point down. So as prices go up, that will head into that area. So just from that point of view, I could see higher prices. I think there's probably going to be support in the buy zone of this wave in the short term. So that would be around that sort of 23.75 to around 24.50. Should be good buying support. If we break back below 2300, watch out. There can be an absolutely huge sell-off, another few hundred points at least, if prices bust below that level. But I think in the short term that's not going to happen. So whatever way this plays out, a bit of selling into the buy zone before rallying again, and then up into that sell zone area where there should be stiff resistance. And who knows what can happen from there. That could then be the beginning of that next major wave down. But that's pretty much how I'm looking at this market now, is that we have had the confirmation of big picture bearishness with the quarterly sell pivot, but the short term is saying that higher prices will be coming. So it's a bear market rally and not a primary wave in a bull market. So tread carefully. All right, that's enough for now. I'll come back with more next Monday.